think we're in an environment where you have a lot of leverage in the hedge fund community where investors, some of these gunslinging hedge funds have borrowed a lot of money to amplify returns in a low yield world. So whenever you get these pockets of pessimism, anything that kind of upsets the apple cart, and in this case it happened to be a lot of lousy IPOs that put too much stock supply on the market when there wasn't enough demand out there, you end up with a sharp sell-off as those hedge fund guys look to cover. So I think when you looked at what happened in March and early April, it wasn't like anything fundamentally with the economy got worse or anything on the geopolitical front got worse. It was just a case where too much borrowed money had been chasing returns, and all of a sudden everybody had one of these periodic freakouts that's happened before, and that gave us this very sharp sell-off, particularly in momentum names, Momo names, but also in the broader market. I think that, again, we don't have a problem with the underlying economics here. If you look at the most recent jobs figures, you can see that the economy is pretty much humming right along. We have the lowest jobless claims figures going all the way back to 2007. We have job creation that's consistently coming in a range between 150 to 250,000 jobs per month. GDP is growing at a not fantastic rate, but 2.5-ish%, typically quarter after quarter. There's only been one negative quarter in the last 4.5–5 years, and yet everyone seems to be fretting about recession. So I think, again, more than any underlying fundamental problem with corporate earnings or with economic growth or with job growth and so on, I think what we had is a case where you had losses in these leveraged funds really get to the point where they couldn't take the pain anymore and they were forced to liquidate. I think that what you have now is a market that needs to see some of the supply dry up. Some of these initial public offerings being done, these crummy companies, those IPOs need to dry up, and that's going to help support the market a little bit. I think we're going to see that soon. And I also think that, again, as long as the underlying economics are still fundamentally sound for the U.S. and world economy, these short-term squalls, selling squalls, are likely to remain just that, short-term. The real issue is if longer-term we see the economy beginning to roll backwards, we see that policy tightenings happening all over the world, not just here with QE going away in the U.S. If we see those kinds of things happen, then that's a problem for the broader economy, but again, and the broader stock market. But we haven't seen that yet, so I think you still want to be investing with an eye towards potential returns rather than fretting overly about risk. This is Mike Larson with Money and Markets.